see, the first thing that messes up a lot of new traders is that most new traders enter the market with one goal: to flip small into large. And you know what? They want to turn a $10 account into 10,000 by next week. Listen, my nigga, you just hopped into the market. How you trying to do that already? And you would rather have a loss with a $10 account than you would to have a loss with a 10K account, because loss with the 10K account is like what, 1K, 5K, the entire 10K. You understand? So you don't need a lot of capital to trade. You just need to be smart about it. But I'm just wanting to let you know that, bro, you don't have to focus on one market. There are so many markets out here that all you have to do is just walk one. Repeat after me. Discipline is freedom, obstacles are stepping stones, and no self-pity. Welcome to Pip Talk Show, and well, today we are going to be breaking down one of the most misunderstood questions in trading. How do I start trading with little capital? So in this video, there's not going to be any theory, there's not going to be any fluff. I'm giving you the roadmap that will make your small capital your biggest asset. So if you stick around, you're going to get some Easter eggs and red pills. Listen, do me a favor. Go ahead, like and subscribe if you haven't already. We got some merch, so you know what, grab that, support the channel, really appreciate it. And well, let's dive in. Alright, cool. So first things first, when it comes to trading with small capital, you need to start with the purpose, right? Not profit. Because you see, the first thing that messes up a lot of new traders is that most new traders enter the market with one goal: to flip small into large. And you know what, they want to turn a $10 account into 10,000 by next week. Listen, my nigga, you just hopped into the market. How you trying to do that already? Here's the hard truth, right? If your goal is to make money fast, listen, you're gonna lose it even faster, because the market always takes money away from the impatient and gives it to those who are patient. So you see, small capital is not for profit. Small capital is more so for process. You understand? Because at this point, when you have small capital, you're building the mental and emotional framework of a disciplined trader, right? Because now it's not about making money, but then figuring out your system and finding about how you flow with your system in the market and how you adjust with your system in the market. Listen, that $10 is your tuition fees. You understand? That's you paying to play. This is a game where you pay to play. That $10 is there to teach you risk, timing, patience, and loss, because you have to understand that loss is a part of the game, and you would rather have a loss with a $10 account than you would to have a loss with a 10K account, because loss with the 10K account is like what, 1K, 5K, the entire 10K. You understand? So you'd rather start learning those disciplined trader habits with a small account. Your $10, understand? Put that $10. When you put that $10, you're gonna then learn and teach yourself risk, timing, patience, and how to lose, because the best loser wins in this game. So I want you to think of it like this, right? A boxer doesn't win the championship because he punches hard. No. A boxer wins because he trained when no one was watching. You see, that $10 account, that's your punching bag. You understand? When you stop chasing profit and you start chasing flawless execution, listen, everything changes, because now you're focused on the craft rather than, you know, the product. Once you focus on the craft, yo, wallahi, I'm telling you, bro, once you focus on the craft, you then see the game in a totally different light, because now you're doing it to become better. You're not doing it to, you know, make the most noise. And the better you become is the more money you make. Understand? The more money you make is the more things you can do in life. The more noise you make is the more noise you make. Nothing happens. So when you stop chasing profit and you start chasing flawless execution, listen, everything is going to change. Number two is choosing the right market, right? So you need to understand that not every market respects small capital, okay? So you need to be able to choose a market where low capital doesn't mean low opportunity. I've got 3 markets in mind that I'm going to, you know, present to you, and I'll need you to understand that this is in no way financial advice. I am not a financial advisor. This is for educational and informational purposes only, right? This is for research purposes. I am not saying to invest in this. Listen, this is just for presenting, right? Show and tell. The first market that I'm going to present to you is going to be the Forex market, right? So the Forex market has 4 advantages, right? The first one is that it is accessible with, you know, as little as $10 or $100 if you've got a bit more capital to splurge with, right? Number 2 is that you can micro lot trade, right? Where now you, instead of having to put one full lot, you can put 0.01. Understand? Number 3, you also have leverage that's also going to let you open positions with small amounts. You'll be able to catch the same position as someone who has what I think is $100,000 account. If you have $100 account, you'll be able to catch the same moves as someone who has a $10,000 account if you have a $10 account. But that's if your leverage is 1:1,000. There's different leverage types. There's 1:50, 1:100, 1:200, 1:500, and 1:1,000. That depends on the broker that you're going to be signing up with. But yeah, you don't need a lot of capital to trade. You just need to be smart about it. The fourth point that I'm going to present to you under Forex market is volatility and liquidity, right? So when you have those two elements, you are guaranteed daily opportunities. And when I say daily opportunities, I'm talking 24/5, right? Markets are open from Monday all the way until Friday, and you know what, you can make a hustle, you can make some decent cash in the Forex market. The next market that I'm gonna present to you is the cryptos market. Cryptos, you can do spot crypto, you can do futures. There are several characteristics of this market that I'm gonna present to you as well. The first one is going to be fractional buying, where now you can buy like fractions of a coin. Instead of buying like one full coin, you can buy like a 0.0000001 of a coin. You understand? Like if you are someone who has dabbled in the crypto market and you're watching this video, you will understand. But if you're not someone who's dabbled in the crypto market, then you know what, yeah, go do your homework. Then you are able to buy into the market with very little amounts. That's the first characteristic of it. The second characteristic is that there's high volatility, right? High volatility means high opportunity, but high volatility is a two-sided coin. So the same way that it has high opportunity, it means that it has high risk, because now the market is moving and prices fluctuating so quickly that if you are not aware to the changes, or if you're not aware of the changes, then you will get taken out or you will miss an opportunity. The third point under this is that it's available 24/7. There is no opening hours and there is no closing hours. If you want to trade, you just have to make sure that you are entering at a time where there's high volume and high volatility. Otherwise, you are gonna get caught out, because the market doesn't always go up and it doesn't always go down. Sometimes it goes sideways and it doesn't know what to do, and eventually it is going to pick a side, but you have to be in the market, or you have to have some type of insight or foresight to be able to see how the market is potentially going to move. And for that, the only thing I'd ever recommend is back testing and chart work. That is the only way you will ever develop the skill to read charts in this game. You can't pay anyone to trade for you. You can't buy a system, because that system is also going to need to be updated. Chart work is the way. Come on now. The last point under cryptos market is the futures market of the cryptos is that it offers leverage, right? Same way as Forex, but once again, you need to be very careful when it comes to leverage. Leverage is tricky, man. Leverage is tricky. I'm gonna do a whole video on that one, on leverage, because gents, y'all niggas are playing. I'm gonna do a video on leverage, volatility, and liquidity. So if you wanna see that video, go ahead and subscribe now, like if you haven't, and leave a comment as to how you're feeling so far. If it's your first time as a trader, or if you are already trading and trying to figure out what's going on, man, join the free PIP hub, Telegram channel, where we post daily trade setups, and we got you all covered as to what's going on. But now, you see, when you're gonna hop into the free PIP hub, right, you need to understand that when it comes to trading with us in the free PIP hub, you must understand that we don't trade Forex, cryptos. You don't trade the regular market, because they're outplayed. And there's no fun in that. We trade what is called, so at Bears Bosom Pips, what we primarily trade is synthetic indices, and that is the third market that is on our list. A quick little breakdown. So under synthetic indices, we've got a couple of points that I'm going to mention. Is that number one, it moves 24/7. So it moves 24/7. It doesn't move based off of news. It doesn't move based off of economic reports. It doesn't move based off of he said, she said. No, this thing just move, and it moves because of, which is point number 2, patterns that are computer generated, which means that it is a little bit more predictable, but there is still that element of randomness, because now the numbers are randomly generated by this computer to now kind of mimic, replicate, or copy movement from the Forex market and the crypto market, but now with less fluctuation and less up down randomly type stuff. You understand? So these patterns are computer generated generated. And you know, the third point under synthetic indices is that it is great for practicing scalping because it has tight spreads. You understand? Tight spreads, like so tight you couldn't even fit a hair through that motherfucker. You understand? Lovely spreads, and you know, you can put like really nice stop loss because, man, like I'm saying, tight spread, you can't miss. But at the same time, you need to watch the spikes, right? Because if you are not very careful, you can get wiped out. But this is on like the other assets like boom, crash. You know, I like to dabble with the volatility indices. You know, the volatility 150s, the volatility 91s, the volatility 90. You know, just I'm not gonna hype this up that much where I'm gonna do a whole separate video on this, but I'm just wanting to let you know that, bro, you don't have to focus on one market. There are so many markets out here that all you have to do is just pick one market, pick one pair, pick one time frame, and master it like a language. Because at the end of the day, the candlesticks are talking, but really only the focused minds are the ones that are gonna understand what it's saying. Point number 3 is master one strategy. So this is where most traders fail, right? They treat trading like a buffet. You know, a little RSI here, a little MACD there, some Fibonacci sprinkled on top. But what you need is minimalism. What you need is one strategy, one setup over and over and over again. Because now it is the boring traders who really make the most amount of money in this game. Like, the more boring your process, the more money you're going to make, right? Because now listen to this. So what I suggest to you is 3 strategies that I'm going to recommend to you. Number 1 is the break and retest strategy. Break and retest strategy now involves you identifying key levels, waiting for breakouts, and then waiting again for a retest to then enter based off of confirmation. You understand? You waited for at least what, 4 signals or 4 movements to happen just to show you that the direction that you want to go into is actually happening, right? Number 2 is the support and resistance flips. This is where resistance then becomes support, or support becomes resistance, or even, you know, when we see rejection, right? That's where the market then gives you those sniper entries, young tall. Number 3 is trend lines and confluence zones. This is where you connect market structure, you combine support and resistance. You don't just trade because, you know, lines exist. You trade where the patterns overlap. So once you pick one strategy, you know what, you have to back test it 100 times. You know, screenshot your entries, your exits, your mistakes, develop it like muscle memory, because a real trader doesn't need to take 10 trades a day. A real trader just needs one clean setup per week and he's done, right? He may trade, you know, 10 times, but in that 10 times he's just trying to figure out if the conditions are right for him to implement his setup and to capitalize on it. You may lose 10 times, but if you catch that one setup is going to pay out 20 times, which means now you cover up 10 times and you still have another 10 to spare. Like, minimalism, the more boring your approach, the more money you can make. Trust me. Number 4 is journal everything. Listen, journaling isn't optional. This is where data becomes wisdom. Because with every trade, you should answer these 5 questions. What is my bias? Am I buying or selling? Why did I enter? What did I feel during the trade? What was the outcome of the trade? And what would I do differently? Listen, the charts tell you where the money is. The journal tells you where you are. The brain can lie to you so many times. You know, it can lie to you and say, you know, I followed my rules, I was patient, but your journal will tell you the truth. You know, the more honest in your journal that you are, the faster your growth becomes, because now you are fixing the truth. You're not fixing a lie about yourself, right? You're being honest. You're saying, okay, this is what I need to do to become better. And the more you focus on the things that you need to do to become better, is the better you become. Like, really, it's that simple. Number 5 is risk management. Risk management is your religion. This is where most traders either build wealth or they blow accounts. Because if you have $100, never risk more than $1 or $2 per trade. You understand? 1 to 2% risk. That is discipline, right? It sounds small, but listen, like I said in the beginning, that when you have a small account, that's the point. Because if you can grow 1 to 2% consistently on a $100 account, then that means you can grow a 1 to 2% consistently instantly on $100,000 account, on $1 million account, on a 10th. Like you can implement the same principles. It's just the conditions that change. You understand? And if you stick to that 1% or 2%, you need to understand that you're doing what 95% of traders cannot do because they lack that discipline. The best way to practice risk management that I'm going to recommend is use a stop loss. Like always, you always use a stop loss. The market doesn't care about your emotions or your plans. You're not here to predict the market. You are here to manage risk. That's all you're here to do. You need to prioritize position sizing over entry accuracy. You need to prioritize risk to reward over ego, right? Because at the end of the day, like, man, ego is what's gonna take you down. You need to prioritize capital preservation over bragging rights. Number 6, build skill over capital. Okay, you need to think of your small account as a gym. You know, big accounts are going to expose bad habits. Small accounts, they force you to kill them. So here's how you are going to use your small account to develop an edge. Number 1 is you're going to work on your timing, right? You need to get in after the confirmation. Don't get in on impulse. Get in after the market has shown you the necessary criteria that defines your edge. Don't get in because you know what, it looks good and I feel like hey, don't come in here feeling lucky. Don't you do that to yourself. Number 2 is practice emotional control. Listen, revenge trading is gonna get you nowhere. Over trading is gonna get you nowhere. Stick to your risk management and stick to your trading rules, because that is what's going to keep you in the game long enough for you to see yourself prosper. Because you are still going to lose, even though you stick to your rules, even though you don't revenge trade, even though you don't overtrade, you are still going to lose. But if you stick to your rules, you have a better chance of winning in the long run, because you know what, you have a plan, and if you stick to that plan long enough, you will succeed. Because the fun thing about the market is that you cannot predict it. The fact that you can lose today and win tomorrow, hey man, I'm with that. As long as I stuck to my rules, I'm with that. Number 3, leads me to point number 3. You need to respect the plan, bro. Respect the plan, because if it's not in the rules, if it's not part of your strategy, then you don't take the trade. Like, don't take that decision. If it's not part of your strategy, if it's not going to help you reach your 6-month goal, your 1-year goal, like, don't take the decision. You need to understand that your skills, they scale, man. You can scale your skills. A disciplined trader with a $10 account is more dangerous than a reckless trader with $10,000 account. You need to become a threat, but you need to do it quietly. You understand? And that $10 account, if you can flip a $10 account to $1,000, what can you do with $1 million? What can you do with, like, bro, it's just the principles. Number 7 is compound the wins. Okay, listen, once you've shown 3-month consistency, once you've shown yourself that you can be consistent for 3 months, then you know what, it's time to scale, right? And here's how you're gonna do it. Number 1 is manual compounding. Every week you need to grow your account. You need to aim to say, okay, this week I'm going to, grow my account based off of taking this many trades, and in this many trades I'm liable to lose this much and I'm liable to make this much. And as time goes on, every week you stick to your trade amount, but every week you also need to increase your position size slightly. But this needs to be based on your performance, because you can't increase your position size when you've been losing. No, you can only increase your position size if you end the week with more money than what you started the beginning of the week with. That's the only time you can increase your position size. Number 2 is regular deposits. Listen, if you can save $10 a week, just $10 a week, then add it to your account. Listen, you're not just scaling your capital, you are scaling commitment. Because now you understand that, okay, this week I grew my $10 to what, $17, $20, $25. Then after that, you're going to deposit another $10, which puts you at like $35, which now allows you to now make, if your goal was to make 50% a week, if you start with $10, means that by the end of the week, you need to have what, $15. So by the end of the week, if you have $15 or $17 and you deposit another $10, that means you have what, $27, which means that now if you want to make 50% of 27, means you're going to have to make $13.50. But just for the sake of the argument, we're going to make $14 next week instead of $5 like last week. Listen, nothing has changed. The only thing that has changed is the dollar amount, not your principles, not your system, not your strategy, not even the percentage. The percentage hasn't changed. You still want to make what, 50% by the end of the week, and that 50% is achievable, but only if you have developed a very good connection and a very good relationship with your system. Number 3 is funded accounts. Top firms are like a cheat code, but they're only a cheat code only after you've proven that you can handle pressure. Don't apply to FTMO or MyForex funds unless you've passed your own back test of discipline, right? Because you need to prove it to yourself first before you prove it to those bros, right? If you can't consistently grow a $10,000 demo account at what 5% a week, then how do you think you're gonna do it with MyForex funds? Once you've now put in real money with a demo account, you can literally open a demo account with any broker out there, bro. Get you a demo account, you get to practicing your system. Once you see that you're confident in yourself and in your system, then you get the MyForex funds. The truth is, once you are consistently profitable with something as small as $100 account, you've already won, bro. Scaling now then becomes a numbers game. The habit is built because now you started with that $10, you grew it 50% all the way until you had $100. You grew that 50%, and eventually, like, it just keeps scaling, bro. It's a numbers game. It's a numbers game. So congrats for making it this far into the session. Do me a favor, like and subscribe if you haven't. Go ahead and grab some merch to support the channel. We appreciate it. And remember that discipline is freedom. Obstacles are stepping stones, and show yourself no self-pity. Bears, Bulls, and Pips, Pip Talk Show. I'ma see you in the next session. Yeah, man.